Sometimes it takes a little bit to get. I'm
Mhm.
my own producer, so let's see. We are live.
Yes.
Let me check. I think we are live, but usually YouTube, our stream generates. So yes, this is okay. Save. We are gonna go live in a few minutes, in few seconds. Sorry. There are some technical things that I need to finish. So
No problem.
yes, yes. Here we are. Here we are. Let me do the last things to check if everything is correct. Here we are. Let me check if
Live
everything is correct.
with the live price in my background.
Yes. Excellent. Excellent. Yes, we are live. We are live. Hello, this is the Bitcoin Libertarian. Our guest today is Dr. Andre Dragosch, European Head of Research at Bitwise, a leading provider of crypto exchange traded products. With a PhD in financial history from the University of Southampton and crypto investing experience since 2014, Andre is the author of Exponential Gold, which explores Bitcoin's role as a transformative asset, a Bitcoin advocate with deep insights into macroeconomics and digital assets. Today, we will discuss his book, his work at Bitwise, and Bitcoin's future. Andre, welcome.
Thank you so much. Thank you so much for the invitation.
And thank you for much for being here. We know that you don't have too much time today because you need to go to pick up your son. So let's go to the first question. The first question, Andre, is how were you orange peel?
How I was orange pilled is a good question. It's
Yes.
always a very long journey, and it's always involving ups and downs, right? But
As usual, yeah.
so to be very honest, my very first involvement in crypto as the Bitcoin didn't start with Bitcoin at first. To be honest, my very first coin was Bitcoin, was Dogecoin. And the reason was because so in 2014, or let's start in 2013. So in 2013, my attention was drawn to Bitcoin for the very first time because there was the story about Chinese capital outflows in 2013 because of Chinese hard landing and Chinese banking crisis. And apparently, Chinese people were actually using Bitcoin to move money offshore, right? That was the story back then, the narrative, which is was the reason why Bitcoin was rallying. And so that was my first time I read about Bitcoin, 2013. And I was working in traditional portfolio management. I had nothing to do with Bitcoin back then, right? And so I told my colleagues about this, have you ever heard about Bitcoin? What do you think? I would like to invest, And they said no, it's a scam, leave it alone. It's only used for illicit activities, like moving money out of China, and so on. So yeah, don't care too much about it. It's just yeah, it's nothing. It will go away. And then I watched painfully Bitcoin 10x in 2013. It went from $100 to $1,000, right?
Yes.
And I thought back then, I mean, hindsight's always easy, but back then I thought oh, okay, I missed the train. It's at 10x. It's now too expensive at $1,000, right? I missed the train. And so I told a university colleague of mine we were studying, who studied economics with me at university, told him about Bitcoin, and he said, wait a second. I know a guy, he became rich with Bitcoin, and now he says Dogecoin is the next Bitcoin. And
Usually
so,
happens.
so this or that's the next Bitcoin was a very common narrative back then, right? Because you had XRP, different kinds of crypto as that were already trading. But of
I
course,
think I I think that, sorry for interrupting you,
yes,
but this narrative of the next Bitcoin is still today,
it's
and
still
it's gonna
alive.
be
Yes,
happening forever because you
yes,
have the newbies that ask you, uh, now it's 100K. I lost the train. It's so expensive.
Yes,
So they come, people would say, this is the new Bitcoin. So
exactly.
go on.
Exactly. So it's a common narrative, and even back then it was a common narrative, right? So what we did was we bought Dogecoin, right, via peer-to-peer exchanges and so on. Not Bitcoin back then because we thought it was too expensive, right? And what happened was, so I think we sold a bunch of it already after it 5x or so, and we made lots of money back then, right? And we thought we were the best investors of all time, right? But what happened back then? So I did all kinds of scams. I invested into shit coins, right? I went through the crypto valley of tears, right?
Yeah.
And the
Everyone.
yes. So I learned my lesson. And what happened was in 2018, I actually picked up the book by Saifedean, The Bitcoin Standard. Like the moment it came out, it was published. I think I bought the book like a couple of weeks after it was published. And so, because I actually had a similar idea back then, I thought like, I think Bitcoin could be like a neutral kind of reserve asset, just like gold. And suddenly, Saifedean published that book, and I was like super intrigued to read it. So I read it, and yeah, this actually got me orange pilled because, and I think many people, many Bitcoiners share the same kind of experience after having read this book, right? Saifedean's book. And even Michael Saylor, I think Michael Saylor nowadays, or at least he used to give like copies of the Bitcoin Standard to, in order to orange pill people, right? That's what
Well,
he said, I think.
the new edition comes with the forewords of Sailor, and his
Yes.
Sailor story is that he got orange pilled by reading the Bitcoin Standard. I have
Yes,
it here. I have it
exactly.
here, the Bitcoin Standard. It's the
So
Bible for me.
so I share the same kind of, same kind of experience like Michael Saylor and many others, right? So I got orange pilled by Saifedean, actually. And
Yes.
from that moment onwards, I knew Bitcoin was different. Bitcoin was special than the other crypto assets, right? It's unique, and it could very well form the basis of a new global financial system, right? As a reserve asset, as a neutral, apolitical reserve asset. And I think since then, I mean, since 2018, the need and like the investment case for Bitcoin as a neutral, apolitical reserve asset has become even stronger, way stronger, right? And if you've opened up the news today, you've seen like Brazil, they've proposed like adding Bitcoin to their strategic reserve. I don't think it's like I think it's not like a news in that sense, because I think that proposal is somewhat older, but nonetheless, I think they're also moving towards Bitcoin as a strategic reserve asset, which is huge, right? They want to allocate 5% of the international reserves. And same like the Czech National Bank, same story, right? They want to invest up to 5% of the international reserves. And so, like, I think we're definitely moving into this direction, right? And so, yeah, and then I started investing into Bitcoin in 2018, which was very late considering the fact that I knew about it in 2013 already, right? But nonetheless, so I started becoming more or less a big Bitcoin maxi, and read all kinds of books. And the funny thing is, in 2018 was also my first institutional experience in crypto assets slash Bitcoin blockchain, because back then we had this kind of retail frenzy, right? This retail hype in 2017, 18. And like I was working at a German family office, and they asked me like, could you write an introduction into blockchain tech and Bitcoin, etc. Right? Because everybody wanted to know about it. Like that was the first, I'd say, institutional attention cycle. Like I think 2017, 18 was the first time many like traditional institutions started to pay attention. But that I think that kind of attention rescinded actually, I think 2019, 2020 already. Like it was a kind of hype cycle, attention cycle, then it debated the following years. And then you had like 2020 with COVID and so on, the monetary stimulus, fiscal stimulus, 2021, new all-time highs in Bitcoin. And then like the new attention cycle started, which is kind of like very usual. I mean, that's like the usual pattern, right?
Yes, yes.
And was actually not surprising. But that like 2018 was my very first institutional experience, because I wrote that like 30-pager for this family office. But I wasn't working full-time in Bitcoin or / digital assets back then. But you want to ask something?
Yes, and that's now what you're doing for Bitwise. You are working, researching 100% on Bitcoin.
Yes, Bitcoin, other crypto assets, of course, because there's simply client demand. But because Bitcoin obviously is the most dominant asset. I mean, in terms of market cap, it's close to 60%. It's slightly less than 60%, but nonetheless, in terms of assets under management and in terms of ETP flows, right, investment flows, the dominance is even higher. We're talking about like 80 to 90% in terms of AUM, global AUM. So it's definitely the most significant asset. And if you talk about price action, like in general, I mean, Bitcoin is so big that it actually determines where the market's going, right? The market direction. And so I think like the large chunk of my work actually focuses on Bitcoin. I'd say 80% probably focus on Bitcoin.
And did you told that you saw at the 2017, 2018, the beginnings of institutional adoption. How do you see the institutional adoption now, and how can it affect the price and the cycles of Bitcoin?
That's probably the most important question. Because so my thesis is, I think the halving cycles have become less important. They've become less important because the supply deficit induced by the halving has declined in absolute terms, right? But also in relative terms. As far as like the supply and circulation is concerned, right? Because like the very first halving in 2012, the absolute supply shock was 25 Bitcoins, right? 25 Bitcoins per block reduction in supply. And 25 Bitcoins back then was very significant because the supply and circulation was only 10 million Bitcoins. So in percentage terms, on an annual basis, you had a reduction in supply deficit compared to like the pre-halving period of, I think, 12.5%. It's very significant. The very latest halving in 2024, for comparison, like the fourth halving, it had a supply reduction in 3.125 Bitcoins per block, right? So that was the supply deficit in absolute terms. In relative terms per year, it's less than 1% relative to supply and circulation. So like the halving effect, on at least on performance, is becoming less and less important, right? Because like the effect itself on the supply is becoming less important. And what is becoming more important is demand, right? If you look at the size of institutional demand, for instance, via Bitcoin ETPs, so exchange traded products like ETFs and so on, but also via Bitcoin treasury companies, it's like 5 times, it's almost 6 times the new supply. If you're talking about like this year, the amount of demand, net demand from just Bitcoin ETPs worldwide, right, including US, Europe, and so on, Hong Kong, and so on, and Bitcoin treasury companies has outsized the new supply of Bitcoin, so the new production of Bitcoin, by a factor of 5.5 times, right? And
that's a number that I always like to take, because when they said, okay, we are gonna buy, let's say Strategy bought X amount of Bitcoin, I always divide for the daily supply and I say, oh, they bought 20, 30, 60 days of daily supply, only one company.
Only one
Now
company,
you have
exactly.
tons of companies and tons of ETF, and in the future, tons of governments fighting for this finite amount of Bitcoin.
Yes.
What is going to be crazy.
And why is like the new supply so important? It's because like we know lots of Bitcoin supplies actually are illiquid, right? It doesn't really trade. It's just being hodled away. Like the percentage of Bitcoins that hasn't moved over the past year is between 60 and 70%, I think. I haven't looked up the latest number, but it's around 60 to 70%. So much of the supply is illiquid. So it's very important, like how much of that new supply is actually being absorbed, right? And we can say it's a multiple of that. That also means you need to have so much more selling pressure, right? To like cap the price from rising, to keep the price from rising. So you need to have like 5 times more selling pressure that the miners are exerting on the market. Because what we've also found out was the miners have mostly sold everything they've mined so far. They haven't kept so much reserves. They've mostly sold much of their mine supply. I think they sold around 99% of the mine supply this year. So that has exerted selling pressure, right? But it was absorbed by these institutional investors. So you need much more supply on the market to keep the price from rising, right? And yeah, this kind of imbalance is so strong. And I think it goes a long way in explaining so this imbalance between like demand and supply, why we've seen, for instance, new all-time highs before the halving last year, right? Many people were surprised and puzzled, said like, oh, this is unprecedented. And it was unprecedented, right? We had like new all-time highs before April 2024 because of ETFs, right? Because of the demand coming from ETFs. And it was so big, the institutional demand. So if you look at corporate Bitcoin treasury companies and global Bitcoin ETPs, it was close to 1 million demand in 2024. And the halving effect was around 164,000. So it was way bigger than the halving effect, which is why, yeah, especially since 2024, you've seen this kind of shift in importance. Halving is becoming less important since last year. And like this institutional demand story is becoming so much more important.
Yes, and also we saw since since the victory of Donald Trump, when all this new rally started, and we went in 1 month from like around 70 something to 100K, that there are a lot of all-time highs. We have all-time high, then it crashed to 75, but then since April to now, we have most of the time over 100K, and we had an all-time high 1 week ago. Even though now the price crashed to 113, we see more often that all-time high, and we see often Bitcoin trying to entering in this price discovery phase. I think that all is connected.
Yes, absolutely, because especially since Trump won the election in November, what you've seen is like institutional demand even accelerated, right? Probably because of the anticipation in regulation, like looser regulation, or let's say just regulation, because it was unregulated before, right? Genius Act, Bitcoin bill, and so on. But like, I think many investors, including Michael Saylor's strategy, by the way, right? They actually anticipated this kind of shift in regulatory sentiment, SEC, and so on. And what happened was, like, if you look at MicroStrategy's Bitcoin holdings, they actually doubled. I think from November until today, they actually doubled, right?
Mm-hmm. Yes.
And so,
and the point,
yeah.
And also not only strategy, we have a lot of companies doing Bitcoin treasury strategy this year and accelerating super fast. Like we have Capital B, that former the blockchain group. We have the Smarter Web company. In fact, the last conference about Bitcoin is coming next week, the conference here in Hong Kong. They will talk a lot about institutional adoption.
Bitcoin Asia,
so
yes. Exactly.
Bitcoin Asia. The main speakers are going to be the CEOs of the companies that are buying Bitcoin like there is no tomorrow. And also, as you mentioned, they are not selling, they are holding. So
absolutely. I mean,
incredible.
The corporate adoption of Bitcoin is one of the key themes this year. I mean, I went to both Bitcoin 2025 in Vegas and also BTC Prague, and that was like the main theme across like both conferences. So it's definitely, and it's I think it's rightfully so, because if you look at like relative demand and the different cohorts of buyers, different groups of buyers, then Bitcoin treasury companies, they have bought the most Bitcoin this year, right? Even more than like global Bitcoin ETPs, even more than sovereigns, even more than any other type of buyer, right? And I think by a magnitude of like 2 times, for instance, magnitude in terms of Bitcoin ETPs. So I think it's rightfully so that this is the key narrative and the key topic of all of these conferences. And of course, like, I mean, David Bailey, he's been funding and founding lots of Bitcoin treasury companies himself, right? I mean, MetaPlanet is sort of a spin-off of BTC Inc. via UTXO. At least they've like, I mean, Dylan Leclerc's an advisor in MetaPlanet and so on, right? Nakamoto, and I mean David Bailey himself. He mentioned he wants to establish a Bitcoin treasury company in almost every major jurisdiction. So I think that story is far from over, right? And if you look at like how many companies, so there are actually two funny observations. So how many companies public companies have put Bitcoin on the balance sheet worldwide? It's slightly more than 150 companies, right? Public companies.
Yes.
I think the latest number I've seen was 153 or 154 or something. And so how many companies actually existed at the end of 2024? So per Q4 2024, it was 70 companies. Mm-hmm. We already doubled that number in less than a year, right? We already doubled that number, and that was like 70 companies in the history of Bitcoin, right? Like since Bitcoin's been existent, 70 companies, and suddenly in 2025 we have this more than doubling of Bitcoin treasury companies. That's one funny observation. But many people say like, oh, it's a bubble, and like so many companies already that hold Bitcoin on the balance sheet. But like 150 companies, public companies, is nothing. I've looked up the number of like global publicly listed companies, and there are 55,000. So there's so much more potential like for Bitcoin to be adopted as kind of treasury asset among corporations. So I personally think that story is far from over.
No, I'm sure that it's just starting, and most of the companies will realize that they will to own Bitcoin for the treasury, because if they are sit in a pile of cash is losing value.
Yes.
It's losing value. They are losing money 10-15% a year, and especially in other countries like Argentina or countries with huge inflation. I think for companies it's a must to adopt a Bitcoin treasury strategy. And let's talk a little bit about your book, Exponential Gold. Can you describe a little bit what it talks about? And I heard another idea about you, that you said that Bitcoin entering in banana zone. Can you explain a little bit your book and a little bit this concept?
So the book itself is called Exponential Gold, and it's supposed to be an institutional investor's guide for Bitcoin and crypto assets. It's also analyzed crypto assets because many institutional investors, they tend to have some kind of crypto asset bucket. So they're looking at the whole universe, Bitcoin, but also the others. That's why I'm also looking at altcoins. But like the main focus of that book, like 90% of the books about Bitcoin, and it usually starts like any Bitcoin book. It starts with an introduction to the monetary system, right, and monetary history, because I think in order to understand the utility and the innovation of Bitcoin, you need to understand the monetary system first. I mean, it's like probably any other kind of Bitcoin book in that sense, but like if you read it, like it's very valuable because it also analyzes a couple of misconceptions with respect to banking, like central banking, commercial banking, and so on. And I think it's super valuable, that particular chapter. But like I said, it's supposed to be an institutional investor's guide. So it also talks about institutional adoption and, of course, how to allocate, right? If you're an institutional investor, how do you allocate into Bitcoin? How do you size it, right? What's the weight? What's the optimal weight in your portfolio? How many times should you rebalance if you invest passively? It also talks about Bitcoin treasury companies and option strategies and so on. So different kinds of strategies and valuation techniques, ESG aspects of Bitcoin. So it has very wide reach. But the reason why it's called exponential gold is probably most interesting, because you've probably heard the expression about Bitcoin, that's digital gold, right? That's the most common expression. But for me, exponential gold is more telling in terms of the future of Bitcoin, where Bitcoin's heading. Because in my view, in order to understand Bitcoin or where Bitcoin is heading, you need to understand this combination of like exponential demand growth, right? Exponential adoption at some point, and gold scarcity. Because we know Bitcoin is a technology, right? This is a payments and savings technology that's being adopted. We know retail adoption worldwide is around 20%, according to various surveys. In the US, I also think it's close to 20%. Some countries it's lower, and Argentina is probably way higher. Countries like Nigeria is also way higher, Turkey way higher, Vietnam. We have places that have close to 50% retail adoption already. But like on average, if you weight it by the population size, then I think 20% is probably a good estimate worldwide. And so we're probably just about to cross, or we're just crossing this chasm from like the early adopters to the early majority in terms of adoption. And what happens during this phase of the adoption cycle? Usually demand starts to accelerate and becomes exponential.
Yes.
And I think we're actually on this kind of path. We're on this path where demand starts to grow exponentially, while Bitcoin remains scarce, right? It remains like absolutely limited. It has a low supply growth rate. That remains the same, but like what's changing is like this exponential growth rate of adoption. And that's why I called this book Exponential Gold.
Excellent, excellent. And you mentioned this concept about Bitcoin entering a banana zone.
Yes.
Can you explain a little bit about that? Because for me, it was that's what I wanted to know and understand.
So I think, so for me, that's just my personal opinion. That's not Bitwise's opinion. Yeah. But for me, I think the US government is on a dangerous path, right? In terms of fiscal policy and especially monetary policy, because you're seeing increasing interference of the US government, especially President Trump, into monetary policy, right? He essentially wants to fire Jerome Powell for not printing enough money, right? And so, yeah, I think it reminds me personally somewhat of like emerging markets, right? We have like, if you consider countries like Turkey, we have like continuous interference of the president into monetary policy, right? It's usually, I think it usually happens in like underdeveloped countries, right? But it's not supposed to happen, right, in like industrial countries like the US. And
Yes.
I think as we're like the US becomes more like an emerging market in that sense, right? We're moving closer to that banana zone, because what it ultimately does is, I mean, if you interfere in monetary policy, you run a very loose monetary policy, like interest rate cuts, maybe even QE. Looser than is probably warranted by your growth rate, by your inflation rate, right, and so on, employment rate. If you do that, what happens like is your currency will ultimately depreciate, right? And if we know anything about Bitcoin as a macro asset, it actually reacts very positively to dollar depreciations.
Yes, of course.
And what we've also seen in our research is like the dollar is also losing its safe haven status. That we are seeing the very first like quantitative evidence that like the dollar is not reacting to increases in risk aversion. Like if you, for instance, if you measure risk aversion with the VIX, with like the volatility index of the S&P 500, since Trump came to power in November 2024, we're seeing like an inverse relationship between increases in risk aversion and the dollar index. So the dollar used to go up, like appreciate during periods of increasing risk aversion and vice versa. But that was called like the dollar smile as well, the dollar smile theory. Like the dollar tends to appreciate when like growth is like not so good, right? Like when there's increased risk aversion, but also during periods of high growth. And in between, it starts to depreciate. Like in boring environments where it's not like hot or not cold, right? It tends to depreciate. That's like the dollar smile theory. But what we're seeing is actually that dollar smile theory is somewhat broken, because now the dollar tends to depreciate during periods of increasing risk aversion, which is a kind of regime break, right? It's a different kind of market regime. And so if like Fed monetary policy, like US monetary policy, becomes even looser, right, over time, we think the dollar will depreciate significantly, right? But I mean, the dollar is probably on a path to like depreciation because it's still overvalued, right? If you look at different kinds of model for the dollar exchange rate across like different currencies, major currencies, in terms of like what is called the real effective exchange rate. So you can model like the dollar's value over time, whether it's overvalued or undervalued, and it's now more overvalued. And this kind of level of overvaluation actually implies a depreciation of around 4% per year over the next 5 years. Like everything else equal, like just because of this overvaluation, the dollar is likely going to depreciate anyway, right? But if like the Fed does looser monetary policy, I mean, we already have loose fiscal policy in the US, right? So the dollar's likely going to depreciate even more, right?
Yes, and of course, you think that the rate cuts are coming. Most of the market think that the rate cuts are coming. And do you think that Jerome Powell is going to continue in his chair?
Nobody knows, right? I mean, you can check Polymarket odds or something, but like
Yeah, that's
nobody
what I
really
checked.
knows. Yeah, I think his term runs until May next year, but of course, the political pressure will at least stay the same or increase even further, right? So, but I think apart from this, I think the data itself actually confirm the view by Trump that the Fed's behind the curve, right? That like both employment and inflation data actually warrant lower Fed funds target rates. So if you look at like a standard Taylor rule, it already implies that the Fed funds target rate should be around 50 basis points lower, because I mean unemployment has inched up, right? inflation CPI inflation, especially core inflation, has come down, right? And so it has actually increased the case for more rate cuts. But yeah, I think at this point in time, it's probably more or less a political game, right? But who knows? But I think it's
And
definitely there's definitely a case to be made for more rate cuts, and the Fed's behind the curve. And I think the risk is actually to the downside in terms of like more rate cuts, because like if you look at the employment dynamics in the US, it looks like they're deteriorating right now. Like both like the May and June revisions were so negative, right? Super negative. Most negatives, I think, since COVID, and outside of COVID, the most negative since 1968. So you have like very strong downward revisions in employment data. And it's quite likely that the July print, like the revised print in July, we also already have the July print, but that the revised print in July will be negative. So we'll have a negative payroll employment print, and that definitely will signal more rate cuts, right, by the Fed.
and what can it happen? What can trigger these rate cuts and all these things to Bitcoin price and Bitcoin adoption?
So the way I think about rate cuts and how it affects Bitcoin is so the short end of the curve that the Fed can control, the Fed funds target rate, and also 3 months T-bill yield, it actually determines the steepness of the yield curve in the US, right? Steepness of the yield curve, so the difference between the 10-year yield and like the Fed funds target rate, or 3 months T-bill yield, right? And what you can see is the moment the Fed, or that's like the historical pattern, the moment the Fed cuts rates, you see usually a steepening of the curve, right? And why is that important for Bitcoin? Because the steepening of the curve tends to correlate very strongly with like US money supply growth, especially M1 growth, but also M2 growth. So the moment you see re-steepening in the yield curve because of more rate cuts, that implies an acceleration in US money supply growth. And we know like global money supply is already close to all-time highs, right? The Chinese credit impulse is accelerating. So the Chinese are printing more money, the commercial banking system.
Yes.
The US money supply is already accelerating, but if the Fed starts to cut rates, even more so. So that will push like global money supply even higher. And so for me, if you believe in this kind of relationship between like global money supply and Bitcoin, that will definitely, I think, make the bull case for Bitcoin valid at least until the end of the year, right?
And do you think that we are gonna see because the foreword of your book was made by someone who I admire, and I agree with most of the things that is Samson Mao.
Yes.
And he says that we are in we can see 1 million US per Bitcoin. Do you think that we are going to see something rational towards the end of the year, like most analysts say, like 180, 200, 160, or we can see some crazy stuff like 500K or even more?
So I don't think my expectation is not 500K by the end of the year. My official expectation, that's also Bitwise expectation, is 200K by the end of the year. And I mean, we could see $1 million per Bitcoin by the end of the decade. Actually, our prediction is 2029 already. So not 2030, it's like 1 year earlier. And the reasoning behind this is that we believe that Bitcoin will match gold's market cap, right? It will be like a strong contender for like this official reserve asset, global reserve asset. So we'll at least match gold's market cap by then. And yeah, in terms of price prediction, I know Samson's calling for 1 million Bitcoin. And I mean, what you need to see in the short term to have these kind of excessive price prediction is you need to have probably some kind of credit event or fiscal event that triggers a rush into Bitcoin. But what we've seen is, I mean, what could trigger this kind of rush into Bitcoin? Maybe fiscal default by the US, who knows, right? But I don't think there will be a default in the first place, right? Because like the US government can print its own money, right? They can always pay interest rates. They can always pay back their debt because they print the dollar, so they can always pay back. The question is, of course, like how much will you actually get back in terms of purchasing power, right? How much value or how much worth will it be, right? But so it will not be like a classical credit default. Eventually, it will be a default by devaluation, which is also like the view Ray Dalio has, right? So default by devaluation. And a default by devaluation is probably more like gradual, right? And not like suddenly in that sense, like we have like sudden devaluation or so. But of course, if you have like a crisis and the Fed needs to print more money and you have helicopter money or like fiscal stimulus, stimmy checks or anything, then of course you can have this rush because people anticipate like strong inflation ahead. And in that kind of scenario, it would be possible, but I don't foresee it in like the near future and not by the end of this year.
Excellent, excellent. Yes, I am a guy from. I think the same of some apps of Samsung. I think that we can see a crazy increase of Bitcoin price, but yeah, most of the rational analysts that look mostly to the data and are backed by data and history data, they all agree that we can see something around 200K. But by the way, it's super high. We remember that we just crossed 100K December 4 last year. So if we can think 200K by the end of the year, is crazy. And
Yes.
two questions. I know that you need to leave soon, so I want to do two questions. One of these is a short one. Do you think that the Bitcoin cycles are over? These typical 4-year cycle are over?
That's also a big question and probably one of the most important ones. So I don't think like the 4-year cycle is necessarily over. We've spoken about the halving cycle. I mean, it happens every 4 years. So I think the importance of the halving cycle is diminishing, and now the importance of the demand cycle is increasing. But what's the demand cycle? How's like institutional adoption or institutional demand usually being driven? It's driven by macro, right? And what's funny about the macro cycle, the business cycle, is that there's a funny coincidence between halving cycles and business cycles. So if you look at, for instance, like 2012, 2016, 2020, 2024, these have all been halving years, right? With halving events in the past. But these have all been years where you had like troughs in the US business cycle. Where the US ISM manufacturing index made its local bottom actually in these years. In 2012 was because of the euro crisis. In 2016 was because of Chinese slowdown and so on, the industrial manufacturing slowdown. In 2020 was because of COVID. In 2024 was because of, because of tariff uncertainty, right? Trade policy uncertainty in the US and so on. So you also have these troughs in the business cycle. And usually what you have when you have some kind of trough in the business cycle, you have so much more upside, right, in risk sentiment. And that's all because it tends to correlate, it tends to cycle with global risk appetite. And that's what we're also seeing in the data. Bitcoin tends to fluctuate with changes in global risk appetite and the global business cycle. Always has been, like, more or less, because sometimes there are different kind of market regimes. But overall, you can say like Bitcoin is most sensitive to changes in like global growth expectations and risk appetite. And so I'd say we're probably seeing a diminishing role for the halving cycle, right? But I think the jury is still out there whether we like the 4-year cycle is completely dead. I think it's dead in terms of halving cycle, but I'm not sure because you have this coincidence between macro halving cycles and, by the way, also presidential election cycles in the US, which is also funny. So there's this coincidence which also happens every 4 years. And so it could very well be that we see some kind of similar 4-year cycle, but it's not because of the halving. It's because of like institutional adoption and the macro cycle. Right?
Excellent. And another question that I want to ask is, you have a PhD in financial history. So and you talk that the first chapter of your book talks about the same as all the Bitcoin books talk about money and the history of money, how money evolved through the years. And we saw that the monetary, like the global reserve asset was changing by year. Now we have in the dollar. Do you see, based on your research and based on history, that we are towards financial, a big paradigm shift, and Bitcoin can be taking the lead as the global financial reserve asset?
I think what's funny about like the current cycle, even like the reserve asset cycle, and you're right. I mean, before the dollar, we had the British pound. Before the British pound, we had the Dutch guilder. Before the Dutch guilder, we had the Spanish peso and so on, right?
Spanish, yeah.
And so like the global reserve asset has changed over time. There's been cycles, different cycles for the reserve asset. But what's funny about like the period after 1971, where the US dollar actually abolished, the US government actually abolished like the Bretton Woods system, abandoned the Bretton Woods system, moved to a fiat standard. We've never seen such a kind of monetary regime ever. Like if you look at past history, it's an exception. It's a kind of economic experiment because like all those previous centuries, and I'm not talking like 16th century only, like even back to the 11th century and even further, like medieval times, you always had some kind of commodity-backed monetary system, like either copper, gold, or silver, right, or bimetal system with gold and silver. So consumer prices have been relatively stable, and they only fluctuated wildly around wars, right? When they had like temporary spikes in inflation. But apart from these wars and conflicts, like most of the time, inflation was relatively stable because of these hard money standards. And now you see 1971 is like a strong, very strong structural break, right? We've essentially embarked on an economic experiment that nobody has ever seen. It's probably the longest period of like a fiat money, an unbacked monetary standard ever, like since 1971. It's more than 50 years of economic experience that's still ongoing, and nobody knows like how it will end it, but it will probably end into some kind of major crisis, right? And after this crisis, you'll probably see some kind of regime shift, in my view, with like Bitcoin as a core reserve asset, as the core fundamental piece of this kind of new global financial system. Many gold bucks would probably disagree, right? But I mean, it makes sense. Gold, of course, is like the pre-1971 reserve asset, right? And there are definitely similar kinds of arguments with respect to gold. But in my view, it's obsolete technologically compared to Bitcoin, because we know Bitcoin is not only hard capped, like 21 million coins and so on, because we don't know the max supply of gold in the universe, right? And so on. It has less supply growth. Bitcoin has less supply growth than gold, but it's technologically superior, right? In terms of transferability, in terms of divisibility, and so on, and verifiability, because you need to have like expert equipment to verify like how much purity this gold is, right? I mean, I'm not an expert in gold. Can be 50%, can be 60%, who knows, right? So in terms of verifiability, it's technologically superior. You can check the supply in real time. And so I think it will ultimately disrupt gold. But I don't think it's disrupting gold right now. It will disrupt gold eventually over the long term, but I don't think it does right now. What happens right now is institutional investors, they move both into gold and into Bitcoin at the same time. They move away from US treasuries, they move away from dollar assets, essentially, and fiat assets in general, and move towards hard assets, both gold and Bitcoin. But eventually, my thesis is even gold will be like disrupted and like investors will move from gold to Bitcoin. But when that happens, nobody knows. Maybe it's like a major gold devaluation or anything, right? Or like
Yes.
the Brazilian government starts to dump gold and buy Bitcoin, or who knows, right?
I think this is going to happen soon, really, really soon, and the world will move towards Bitcoin. And I have the last question before you leave, and it's the last question that I do to everyone. And if you had the chance to sit down with Satoshi Nakamoto to have a coffee, what would you ask or say to him, her, or them?
Well, I never thought about this, but I would probably be just stoked by his presence and the fact that like his identity, right? But there would probably be so many questions. So
Excellent, excellent. So, Andre, thank you very much for your time. I would love to be longer the interview. I wanted to talk more about macro, about economics, about history, but you need to leave. So, again,
thank you,
thank you very much for your time.
thank
Anything
you so
else
much.
you want to add? Anything else you want to add, and how people can contact you?
Yes. So yeah, you just mentioned my book. It's available on Amazon, Exponential Gold. So you can buy it there, even if you're in the US or in Europe, you can buy it there very easily. I'm also on Twitter. You can find me at Andre_Dragosch or LinkedIn.
Excellent. I will order your book in the next, probably in one of the next batch. I usually order a couple of books to be shipped to Hong Kong. I will read it, and after
Thank you
read
so
it,
much.
we can do another
Catch up.
episode, probably
Yes,
with a
sure.
little bit more time, and talk about more about macro than things that I like. So thank you very much for your
Thank you
time
so
anyway.
much. And hope to
And
see you
thank you very
soon.
much to everyone who is on the other side. If you like the episode, please give us a thumbs up, share it. Our social media, our Twitter is the Bitcoin _. Our new YouTube channel, because the last one was taken down by YouTube, is Bitcoin Libertarian. Our YouTube channel in Spanish, Bitcoin Libertarian ESP. Our Patreon, the Bitcoin Libertarian, and our Instagram, the Bitcoin Libertarian. Share this episode with the people you love. Share this episode with the people you hate, because we must reach 8 billion people to come into Bitcoin. See you in the next episode of our podcast. Stay humble, stack sats, and remember, we are all Satoshi. And if you are coming to Hong Kong conference, please look for me inside the building and we can have a chat. Thank you very much, and see you in the next episode of our podcast.